Well, I think the release of the strategic petroleum reserves has certainly pressured prices, and I do expect that if we were to get a 50 million barrel release from the IEA members, we'd see oil prices fall another $3 a barrel. But I think the jury is still out because these SPR releases are really just buying us time into the future, and the market is still trying to figure out how much Russian oil is ultimately going to be kept off the market.
What are the China demand signals telling you, Andy, and just how bearish are they?
Well, what we're seeing is, decreased demand in China due to some of these COVID lockdowns around Shanghai and the fear that they may spread to other regions in China. But on the oil market, on the other hand, is these deeply discounted Russian oil that's on the market, about $30 a barrel discount to Brent, is enticing a number of Chinese and Indian refiners to take in those supplies.
So does this mean then that if the risks are still tilted to the upside, if the full effect of Russian sanctions has not been priced in, if India and China are restocking as they say, as you say they are, then are we looking at Brent making a comeback to 120, 125 in the second half of the year?
Well, I think it's a very likely possibility. I do think that if we determine, or the market determines, that 2 to 3 million barrels a day of Russian oil is permanently off the market, then we will rise back to Brent at $115 to $120 a barrel, because you need that type of price to either get more oil out of the ground or to encourage some demand destruction to get us back in balance.
Andy Martin here. Good to see you again. Appreciate your time. Always talk to us about the situation with the diesel. I personally feel that we haven't been talking about this enough. I mean, this is literally the blood that keeps the whole world economy going.
I think this is a huge issue. Here in the United States, diesel prices are up about 30%. But not only that, the U.S. has been a major exporter of diesel fuel, over 1 million barrels a day. That's equivalent to what Russia has been exporting into Europe. The majority of our diesel fuel has been going to South America, but now we see more of it making its way to Europe. And in fact, we're arbing diesel fuel out of the East Coast, which usually buys diesel fuel, back to Europe and down to Brazil. I think the greatest impact on higher diesel prices is happening in Latin America, where the national oil companies issued tenders, and now they're issuing tenders for less volume because it's gotten so expensive.